Should I buy a home now or rent for another year and see what the market does? This is one of the questions that I find is almost defining this period of time in real estate, and one that I imagine most everyone will ask at some point in their lives in some way or another. Especially now, right, with so much uncertainty in the economy in general and in the housing market in particular, this seems like an especially pertinent question if that's where you find yourself right now. My name is Jake Lyons, realtor with @Properties here in Chicago and owner of thechicagohomesource.com, bringing you well-informed, data-driven content as always. And let me just first off say that even as a real estate agent, I have no beef with renting. There are an infinite number of completely legitimate lifestyle and financial-based reasons to continue renting rather than buying. However, if you are someone who you could buy and you're maybe feeling the pull to buy something, but you're thinking maybe you might just want to, rent for another year, wait on the sidelines for another year or two, and just see what these prices do, see what these rates do, anything like that. Here's a thought exercise that I think could be helpful. Let's just say right now you're paying $3,000 per month in rent. Depending on where you are, that could get you a castle or it could get you a shoebox. I'm an agent here in Chicago, so I'll just use the Lincoln Park neighborhood as an example, although this can apply to anywhere and really any price point. $3,000 a month in Lincoln Park will get you an above average 2-bedroom apartment. Right now, as I'm running this, $3,000 would also be the approximate payment on a $360,000 condo, depending on how taxes, HOA fees, insurance, and things like that shake out. That's also with only a 3% down payment, which is the lowest that I'm aware of for a conventional loan right now. So now, regardless of how we feel about renting, I think we can all agree that paying rent is building you negative infinity equity, right? You're paying for a product, and once that money is paid, it's dissipated into the ether with nothing to show for it other than the right to have occupied a space for an agreed to amount of time. So over the next 12 months after renewing this lease, that's $36,000 worth of negative equity. Compare that to if you had bought the $360,000 condo. For you to be worse off from a loss equity standpoint, that condo that you bought would have had to decrease in value by more than 10%. This means if you bought a $360,000 condo today and a year from now, that same condo would only sell for $324,000. It may feel like a loss, but in reality, you're no worse off than if you had rented during that time. You're at breaking even. In fact, you actually are doing better because at least a portion of those payments were paying down the principal on your loan, which is half the equation when you're figuring out how much equity you have in your property. Even if that kind of worst case scenario did happen, as long as you're buying property in areas with strong fundamentals and with the right amount of patience, real estate is almost never a losing investment. Even in the '08 crash, right? The biggest outlier black swan event in the history of real estate. It was back to its pre-crash levels in a matter of a few years and continued to grow like crazy from there. The big question then is, how likely is this kind of drop to happen? I'm not a fortune teller. I'm certainly not one to tell you that it could never happen. In fact, on a national level right now, according to the St. Louis Fed, right now the quarterly median sales price is up about 1% year over year, but it is down about 9% from Q4 of 2022. That's the steepest one-quarter drop I see anywhere on that chart on record. So, there's that. There's also the fact that in my market of Chicago, on a whole city level, the quarterly median sales price is down only about 2% year over year and actually up 5% from Q4 of last year. And those numbers vary even more drastically from neighborhood to neighborhood. So all of this is to say, real estate is all about location, and different markets are going to have different outcomes. In the months and years ahead, I do think that some US markets may have the kind of reckoning that will entail that kind of drop, if not more. Especially some of these markets that have seen just outrageously unsustainable levels of growth in the last few years. I also think there will be a lot of markets that outperform that kind of result and in fact do quite well. Ultimately, aligning yourself with someone who is in this stuff every day and help you navigate all these variables and ensure that you're giving yourself the best chance to buy a home with strong long-term fundamentals. I think that'll be a key for you. If you happen to be in the Chicago area, I'd love to have a chat and see if we could be a fit. If you're anywhere else, I'd still be happy to chat because odds are I have a professional connection with someone in your area. Hope you found some good value out of this video. If so, please give me a like, subscribe, a comment, something along those lines, and look forward to seeing you again soon. Thanks.